What you're looking at on your screen right now is a prediction market, Polymarket. Many of you will already be familiar with it, but in this video I want to walk you through something quite specific and, in my view, quite interesting, because after spending some time analyzing these markets, I believe there is a meaningful mispricing, particularly across two Ethereum-related outcomes. The first is whether Ethereum will reach a new all-time high by the end of 2026, and the second is a simpler but very powerful question. What does Ethereum hit first? $1,000 or $3,000? So yes, this is partly a price prediction discussion, but more importantly, it's about identifying where the odds being offered may not fully reflect the underlying probabilities, and that, ultimately, is where opportunity tends to exist. Now, of course, this is still speculative. Prediction markets, by nature, involve uncertainty. But much like trading, you're not locked into a position until the final outcome. You can enter and you can exit as probabilities evolve. So let's break this down properly. Let's start with the first market. Will Ethereum reach $3,000 before it reaches $1,000? At current pricing, if you were to allocate $100 to the $3,000 first outcome, you would receive approximately $175 in return if correct. Now, what matters here is not just the payout, but the implied probability behind that pricing. So I took this data and ran it through CoinGPT, which is a dedicated AI trade assistant designed specifically for crypto market analysis. It incorporates a wide range of inputs, macro conditions, technical structure indicators, historical probabilities, and broader market context. And importantly, I didn't rely on just one source. I cross-checked this across multiple models: CoinGPT, Grok, ChatGPT, and Gemini. The result was surprisingly consistent. Across the board, the estimated probability of Ethereum reaching $3,000 first came out at roughly 72%. Now compare that to the market pricing. If a $100 stake returns $175, the implied probability is closer to 36%. So you have a situation where the market is pricing this as an approximately 36% event, while the data suggests something closer to approximately 72%. And that gap is where the edge exists. In simple terms, you are being paid as if something is unlikely, when in reality, it may be significantly more probable. From an expected value perspective, that is what we would define as a positive EV setup. Now, how you choose to act on that is entirely up to you. You could participate directly via Polymarket, or, if you prefer, express the same view through the futures market, perhaps with controlled risk and low leverage. But the core idea remains the same. In my view, Ethereum reaching $3,000 before $1,000 is materially underpriced. Now, let's move to the second market. Ethereum reaching a new all-time high by December 31st, 2026. Here, the pricing becomes even more interesting. At current odds, a $100 position would return approximately $460 if correct. So again, the first step is to translate that into implied probability, then compare it to a data-driven estimate. Using CoinGPT's trade assistant, I ran a structured probability model, macro conditions, and overall market cycle positioning. The output suggested an approximate 68% probability that Ethereum reaches a new all-time high, defined conservatively above $5,000 within that time frame. And again, I cross-referenced this across other models and sentiment analysis tools. The conclusion remained broadly consistent. So once again, we have a gap. Market-implied probability, significantly lower. Estimated probability, around 68%. I then asked a very direct question. If there is an approximately 68% probability of this outcome, and the payout is $460 on a $100 stake, does that represent a strong trade? The answer, both from CoinGPT and from independent models, was clear. From an expected value standpoint, this is considered a high-quality opportunity. Even when adjusting assumptions around payout structure, the conclusion did not materially change. Now, to be clear, none of this is guaranteed. These are probabilities, not certainties. But the key point here is not about being right every time. It's about identifying when the pricing of risk appears misaligned with the available data. And in my opinion, that is what we are seeing here. If we zoom out and look at the charts, the broader context supports this view. Bitcoin continues to trade within what many would consider a long-term accumulation or reaccumulation range. Ethereum, structurally, is showing similarities to previous cycle behavior, particularly the 2018 to 2019 transition period. On the weekly time frame, there are signs of a potential bottoming structure forming, with momentum indicators like RSI sitting in. Ethereum, structurally, is showing similarities to previous cycle behavior, particularly the 2018 to 2019 transition period. On the weekly time frame, there are signs of a potential bottoming structure forming, with momentum indicators sitting in deeply oversold territory. And more broadly, Ethereum still appears to be coiling within a long-term ascending structure that dates back several years. Periods like this often precede expansion phases, not immediately. So when you combine supportive technical structure, improving macro conditions, and probability models suggesting higher likelihoods, with markets that appear to be pricing these outcomes more conservatively, that's where things become interesting. Let me know in the comments what you think. And if you want to explore this type of analysis yourself, you can try CoinGPT. It allows you to generate probability-based trade insights, identify key levels, set structured stop-loss and take-profit scenarios. And importantly, it also includes a scanner. So instead of manually searching for setups, you can filter the market in seconds.